Hey everyone, in this video, I'm going to answer which one I think is the better AI stock to buy today, Supermicrocomputer or Taiwan Semiconductor Manufacturing. Of course, both of these companies work with NVIDIA. TSM is a supplier to NVIDIA. Supermicrocomputer works with NVIDIA to install systems in enterprises. So both of them riding the positive tailwinds from NVIDIA, but which one is better? That's what I'll answer in this video. I'll compare these two on revenue, on profitability, on valuation, and what their prospects look like over the next few years to come to a conclusion on which one is the better buy today. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Starting with revenue growth, if we look at this comparison, you'll notice that Supermicrocomputer has been surging of late, 103% revenue growth in the latest quarter, and management of SMCI thinks that this is going to continue at least for another quarter or two. Meanwhile, Taiwan Semiconductor is rebounding from a cyclical bottom, negative 1.53% revenue growth in its latest quarter, but it has excellent prospects ahead in terms of revenue growth as well. TSM investing in increasing capacity as it sees greater demand for its semiconductor technology. The next thing I wanted to compare these two on is operating profit margin, and here you'll see TSM's incredible operating profitability, 45.62% in the latest trailing 12-month period, far exceeds nearly 5 times that of Supermicrocomputer, 9.4%. Additionally, Supermicrocomputer management stating that they're focusing on increasing market share, increasing revenue, and they're willing to offer better prices to gain market share. So their profitability not likely to be that strong in the near term, not likely to increase by all that much, despite the surge in revenue, because the surge in revenue is coming partly due to better deals. Their management team saying that they're going for the land and expand strategy. That is, when they try to secure a deal with a business first, and then once they're in, they'll try and expand and gain more traction within that existing business. So in other words, they're offering introductory deals to businesses to get their foot in the door, and then they'll expand later. Taiwan Semiconductor not playing those games, generating strong profitability on their sales, 45.62% most recently, and you can see that number rising significantly over the last decade. The next thing I wanted to look at between these two is their return on invested capital. Supermicrocomputer surging of late to 30.59%, and since January of 2023 exceeded Taiwan Semiconductor in this critical metric. Taiwan Semiconductor on the way down here to 20.27%, although that was because of the cyclical bottom. Now that semiconductor industry is rebounding, I wouldn't be surprised if Taiwan Semiconductor's return on invested capital turns back around, starts heading towards 30% again. Maybe not all the way up to 30, but in the mid 20% range is likely in the next couple of years. I also wanted to look at the next 5 years. What does profitability look like for Supermicrocomputer and TSM? Well, for Supermicrocomputer, the analysts on Wall Street that are following SMCI stock, they think its earnings per share will rise by a whopping 42.2% per year for the next 5 years. That's a really strong earnings per share forecast for Supermicrocomputer, as it benefits from enterprises trying to install and implement AI capabilities. Taiwan Semiconductor, meanwhile, not as robust in terms of earnings per share expectations for the next 5 years. Remember I mentioned that the company is investing in expanding capacity? Well, that's going to weigh on earnings over the next few years as those investments start to initially weigh on costs before they increase later on down the line. Those investments are going to weigh on costs, and its earnings per share are expected to only increase by 4.3% over the next 5 years. One of the additional areas that Taiwan Semi is investing in is in geographical expansion. Right now, the geopolitical risks are large for Taiwan Semi, so it's expanding its infrastructure, its manufacturing capacity overseas a little bit away from Taiwan. It's adding facilities in Japan and in the US in Arizona to try and diversify away from being so focused in Taiwan. That's going to help with some of its geopolitical risk. Not all, but some of its geopolitical risk, making it a little bit more attractive to investors that are concerned about the tension between Taiwan and China and where things could go and how TSM could be impacted by those relationships. Finally, I wanted to compare these two on valuation, and measuring by the forward price to earnings ratio, you can see Supermicro is almost twice the price of Taiwan Semi. SMCI is trading at a forward PE of 33.26, and Taiwan Semi is trading at a forward PE of 18.43. You could see the valuation has flipped since January of 2024 as SMCI has absolutely soared. You can see for the last year, and I could go back further. Let's go back 3 years on the fly here. Let's see if this chart will load up in time. There we go. So you can see here, over the last 3 years, Taiwan Semi has been the more valued stock, the higher valued stock, the one trading at a more premium valuation. That is until January of 2024, when SMCI reported that surge in revenue and surge in demand. And now it's flipped the script here and it's way more valuable than TSM. I don't think this is a long-lasting trend. I think this will mean revert at the very least, where the valuations will contract closer to each other. Whether that means TSM's valuation will increase or Supermicro's valuation will decrease remains to be seen. But I think the more likely scenario is that Supermicro's forward PE ratio decreases back to its longer term norms, maybe not back to where it was, trading under single digit forward PEs, but I don't think it's going to remain trading at above 30 forward price to earnings ratios for very long. So that being said, if I had to pick one of these two AI stocks to buy today, I would pick Taiwan Semiconductor. Even though Supermicro has phenomenal near-term prospects, I think longer-term, Taiwan Semiconductor will take back the lead here in terms of the valuation, in terms of revenue, in terms of cash flow and profitability. I think those figures will start to shine as the initial surge here in spending for artificial intelligence. It's going to be explosive for, I would say, the first 3 years. So 2023 was the start. 2024 is going to be explosive increases as well. I think 2025 will continue with explosive growth in artificial intelligence. And then I think the rate of growth will slow down starting in 2026. Even though that industry will continue growing for decades, in my opinion, the rate of growth, I think, will slow down, and that will favor Taiwan Semiconductor in this relationship here. So the better AI stock between these two to buy today, in my opinion, I would choose Taiwan Semiconductor. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.